Hello, guys. Welcome to the first podcast here with Valetax. My name is Dennis Mwenga. I'm the global market analyst at Valetax and also an educator as well. So, guys, today is going to be a very interesting day because we're going to have a very interesting conversation. I would like to call this the debate between typical normal brokers and the prop firm model of brokers. So, since 2024, there has been a blowout basically of what is referred to as prop firms. And prop firms came out and they came in the industry, and many traders got attracted to prop firms. But heading towards now our current time, this is in 2026, we are seeing a decline of this trend. Okay, there's a slight decline of this trend with some prop firms coming up and some of them collapsing as well. And traders are typically trying to come back to the normal brokerage model of doing business. So in this debate today, in this conversation, we want to explore why this has been the reason, why is this basically happened, and what led to that expansion and also contraction of the prop firm space in the industry. So with me today, I have Samuel Nyaga. Samuel Nyaga has basically been in the industry for, I think, more than 5 years, but he's going to tell us more about how long he has been in the industry. So he's perfectly placed to tell us this transition that has been happening, what he has been witnessing, and what has led to this development. So welcome, everybody. And Samuel Nyaga, welcome to the show.
Thank you.
Someone who is an expert in this space.
Thank you,
You are
Dennis.
well equipped to tell us what has been happening. So Sam, before we start, please tell us briefly, what is your background in this industry? How long have you been in this business, and how did you essentially start? Typically, just a little bit brief background.
Excellent. Thank you, Dennis, for having me. So my name is Samuel Nyaga, and global market specialist for over 10 years now. Started way off back in 2016 when the market in Kenya was not that huge. Most people just had a notion of FX markets, but we had no regulation. We had nothing basically. But had the privilege of actually witnessing the whole circuit of financial markets, both both in Kenya and internationally. And I would say it's quite been exciting. And then I would refer to a term like just the Grand Prix. I'm sure you've watched what's happening around the world. That's how FX markets works like. There's always one big thing leading to another. Yes. Yeah.
Okay. So the big thing has been since that time, from 2024, as I had stated earlier, the big thing that emerged when retail trading became popular. One of the big things that emerged was prop industry trading. So Nyaga, what is prop firm? What is a prop firm?
Fantastic. So prop firm is the short form of proprietary trading, whereby as an investor or trader, you don't typically possess the funds. Someone lends you the money to trade. And then this is actually an agreement whereby you agree you're going to possess a certain percentage of profits. Mostly goes around 70% for the trader and 30% for the firm. So a firm or a company gives you the privilege of trading with your money. The most agreed debate is we are going to be cutting these profits. It's going to be automated once you meet this criteria of trading under our conditions, you are eligible to earn this profit. Yeah.
Okay. So,
Yeah.
but this is, will you call this free money or is it demo money?
It's basically what happens with prep firms. It's not typically real money.
It's not real money.
It's demo money. So what happens?
Yes.
Basically, they have these items called challenger accounts, whereby you have to undergo a certain phase of trading with that challenge account, and upon meeting their criteria, and you're able to now acquire a real account. But behind the scenes, it's not real money. Remember, prop firms, they are in business, and they have thousands and some have millions of subscribers. So this money helps them to remain solvent in the market. And these rules, they are very complicated. They're engineered to make you fail. So at no one given point, think of gambling. Think of gambling, how it works in a nutshell. No, at no one point you're going to have 1,000 winners taking the jackpot away. It's always one winner.
Yeah, it's always, definitely. The house always wins.
Yeah, absolutely.
So there are some rules when it comes to, I've looked a little bit into this, done a little bit of research. So there are some rules. For example, one of the most interesting rule is that your performance in your trading account is based on daily drawdown limits and not closed balance.
Yes.
That's daily drawdown limit, not closed balance. So if your account hits a certain drawdown, then you are in trouble. And before we even continue, what is, for the purpose of those people who don't understand, what is the meaning of this, closed balance and daily drawdown? And before you elaborate, yeah.
Great. So I think we can start with closed balance. Okay. Ideally, when you're trading, let's say on your own account, and on let's start with prop firm. There's a certain limit of trades. Let me say you must actually attain to say that day I've hit the target. Because as I said earlier, they give you your account, they shut your account for like 21 days or 1 month, whereby you have to consistently hit the rules on a daily basis until you now guaranteed to be a winner. After 21 days, they open the lot for you. So for that case, you have those positions that accumulate in a day. And that's now what we can say it's closed balance. You've closed the day at, let's say, 40% of your equity, right?
Okay.
So for drawdown, this is what now the running positions. Let's say you're trading, let's say, asset Euro USD, or even what they call gold, and for open positions, they have 30% of the equity, right? So this drawdown, this is happening in real time, okay? Unless you come to a point whereby you say, I'm carrying a big loss, I want to cut it short. I want to take a break even or close early. So drawdown is basically the entire size of positions that you're currently running.
Open positions.
Open positions, ideally. Yes.
Okay.
Yeah.
So now, let's say, for example, I'll use an example of myself.
Yes.
The way I trade.
Yes.
Okay. I trade looking at fundamentals, looking at, by fundamentals, I mean, I look at macroeconomics.
Yes.
And I try to see, what catalysts will drive price for the next several days. So maybe I'm looking for a multi-day move, a multi-day setup. Sometimes I do day trade, but sometimes you find there is a catalyst that can tend to move the market for days. So that means I will take a position in the market as a swing trader, for instance. And when you are swing trading, sometimes your open balance, the floating balance that you're talking about, it fluctuates. Yeah, you find today you are up, for example, can be 60, 50 pips plus. Then tomorrow you have a drawdown of more than even, 30 pips, but the trade is profitable. So what happens, in this scenario?
Good questions. I think that's a very interesting question because I think it's very important for an investor or a trader to understand the fundamentals behind prop trading. And then, unfortunately, to say this, prop trading does not reward the most brilliant, the most smart trader, the most well collected trader who does the analysis. Let me say on a daily basis, you're very cautious on your risk reward. Let me say systems and all that, and it's actually a controlled trading management system, whereby you might have made a very brilliant move yesterday,
Yes.
and read the market and learned that I'm going to take this amount of pips or profits from this trade, but the prop firm is telling you if you're trading, if your positions misbehave in a given way, we are taking you out. And by taking you out, we're actually liquidating you. We are making you insolvent. And telling you, giving you a handshake, tell you, bye-bye, try again. So I think it's good to be prepared psychologically. Well, if someone says, I'm going to embark on this journey, trading with borrowed money, prop trading, and understand that it's actually a give and take scenario whereby the firm might decide to take a win against your trades.
Okay, so in this case, if I'm a swing trader and I incur drawdowns, and the rule is based on closed balance, then I'm in trouble.
You're in trouble, big trouble. You could have made a very big profit.
Yes.
But one macro activity happens, and you're actually thrown outside.
Wow.
Yeah, in a split second.
Okay, so that's interesting. Let's move on to the next segment. From an operational perspective, there is this thing, you hear payouts. This is where now issues sometimes begin. Payouts. So this prop firm, for example, or desk, whatever you can call it, you find that it's regulated offshore, but the most I've seen, they're not even regulated, to be honest. They really aren't regulated. Where is the money coming from for the payouts?
Interesting. So I think we call it this the elephant in the room concerning this matter. And then there's no history of regulation for prop firms. These are investors who comes together and say, we are going to launch this prop firm and make it, let me say, quite appetizing in the eyes of a trader.
And you mentioned earlier, this is demo money. This is paper money.
Paper money. And then in this scenario, remember, for a typical broker, you are connected to, let's say, the market directly.
Yes.
And then they are mostly referred to as the e-book. So for prop firms, they have now their own version of book.
Okay.
We can call it behind the scenes book.
Behind the scenes book.
And remember, I don't mention names. These prop firms, they have millions of subscribers all over the world.
Yes.
And then per given size of an account, they have a certain amount of subscription. This could be $100, $200, and so forth. So what now happens? They know, most traders, this trading is an emotion-led activity, full of adrenaline. Let's say something happens in gold, it's going up, you want to buy, didn't have your setup ready, you bought in, you made a loss. So these guys, they know they're going to out of let me say out of 10, they'll have like 9 out of 10 failures in this activity. So this money, they used to pay this money to the people who've been able to succeed in hacking the system. Right? So let's say 90%, 99% of people who trade in prop farming, they fail. Right? So, and remember, they paid subscription.
Okay.
So they're using this money
to
pay
the payouts.
The payouts.
Wait.
Yeah.
So this sounds like Sam, are you alluding this is a pyramid?
As I said, in the eyes of, like, basically, when someone tells you I do prop trading, I have an account of $1 million.
Yes.
You're going to regard them as sophisticated, right?
And it's $1 million demo money.
Demo money.
Okay.
So in the eyes of an investor who is trading $1 million, the prop firm assumes that this guy has gone through the traditional trading system of a broker, and now they want to get in the what you'd call the UFC of the big money, right? So in the eyes of
WWE,
absolutely. So in the eyes of these people, they believe that these traders, they know that they're taking this level of risk, and they, as you know, in trading, as we say, past performance, so a guarantee of
future
future performance.
Yeah. So now you're saying the payout comes from the subscriptions,
Absolutely.
because now if it's demo,
Yeah.
that means you're not linked directly to the interbank market.
Yeah. Actually, they even tell you when you open the MT5, you can even see the servers are demo servers.
Ah.
You might even want to ask them, I purchased a real account. What happened? They tell you, relax. once you make money, once you make the profits, we are going to pay you. Right? And because you are very fascinated by the idea of trading a big account,
Yeah.
you're like, okay.
So that presents
Yeah.
that presents a risk. That presents a risk whereby if, let's say, there are many traders who are demanding for payouts.
Yeah.
And this is not real money, and the payout is based on subscription.
Yeah.
And there are many traders demanding for payouts. There's gonna be a delay.
And we've seen that happening. Actually, if you can remember, we've seen big prop firms going under,
Yes.
collapsing,
Yes.
total collapse.
Total collapse.
Yeah, because they were not able to, they forgot to tighten the bolts and nuts of the rules.
Yeah.
So some very wise traders were able to hack through and make millions of money.
Yeah.
And now they have to make huge payouts.
They have to make huge payouts.
Yeah.
And everyone is demanding for a payout.
Absolutely.
And everyone has been trading on demo, not
And now remember, as you asked in the question, they don't have regulation. So if you look,
Yes. Oh, yes, that's another factor.
number two, it's not your money.
Yeah, it's not your money.
So
Yes.
yeah.
Yeah. Definitely.
That's a big deal.
Okay. I see. So now let's look at the other thing, psychology of ownership. What I call psychology of ownership. You don't feel that you own this money. There's no that sense of ownership. What does that do to a trader?
So I think this sort of model, it works. It actually work very badly for the trader, because remember, you're coming from trading $100 accounts and making money at some point to now holding an account of up to $10,000, and it's not your money. So there's no collective sense of responsibility of this money. There's no connection. There's no connection between this level of money to yourself. It's not something that you've said, I'm going to save money to invest and trade gold. Someone has given you a handout, and you've paid a very small amount of entry level to access that handout. So what will happen? You're going to because now you are desperate to turn around a big account, you're going to employ, let me say, aggressive tactics to trade and lose the account, as opposed to knowing this $10,000, it's my money.
Yes.
So I'm going to apply very good tactics to make money, let's say on a weekly basis, and grow my account exponentially.
When it comes to risk management.
Absolutely.
So you're going to be more cautious when it comes to managing your risk.
Yeah.
I
Just
see,
like
I
the way you'd say, you're given a Ferrari on expressway for the first time. So what
give me the Ferrari.
what will happen? What will happen?
Oh yeah, exactly.
That's the thing.
Yes,
That's the thing.
I'll pump the gas.
Yeah.
That's I'm not used to the Ferrari, and I'm having the Ferrari for the first time.
Exactly.
I'll pull. I'll just squeeze the gears. Just shoot, completely shoot. So now, something else. Look. So you are under a lot of tension, right? As a trader psychologically, because of these rules. What is now happening there? And trading is very emotional. You need to balance your trading psychology, and there are these rules which are very stringent. You need to stick to them.
So basically, that now leads us to the perpetual cycle of losing streak.
Yes.
At the front phase, let's say you are telling your colleagues and friends, I trade big money, and maybe for this particular reason, you want to engage high net worth investors to maybe get the opportunity of trading their money. And then you are here trading a $1 million account. It is proper money. And of course, you might make money.
Demo money.
Now, you convince that investor that you're going to trade their $1 million account, family office money. So what happens? You get the money. Remember that Ferrari notion we've used? Now, as opposed, before you're having very stringent guardrails on the account. Remember the drawdown rule and also the day limit rule. Now here it's open. It's like free trade. You cannot press the gas the way you want. You know, and that's what makes people not profitable, or not win, not have a winning rate in the market. You end up now in the perpetual losing streak, purchasing one account after another, you're trying to prove a point that out of 10 accounts, maybe I can flip twice. You know? Yeah.
Okay. And another, final thing, final question or observation, if I may say, if I may call it, is it's important for someone to have a track record. Do you get to have a track record with a demo account?
Not really. Because remember, when you approach these money managers or big investors, they've already heard about the prop firm debacle. So at the end of the day, they want to independently verify the financial statements. And unfortunately, they can't do that. So there's no trust from this level of arrangement. And then you might want to prove a point that you know how to trade. You might even come up with a certificate of achievement. Let's say I did a challenge of $1,000 or $1 million, and I passed the challenge. But for the high net worth investors or private families, they want to see the actual. They want to have an actual reference.
And by the talking of that, it has reminded me of an experience I once had before. I once had someone come to, there was a trading desk I was working for. And I had a trader come, and he was coming with all these certificates. I've won this challenge, I have this certificate, but the head trader did not entertain him.
Absolutely.
Did not entertain him. They did not you go back, get your track record from, let's say, my FX book, MQL5. And now that's where now the broker comes in, the direct broker. Like, let's say, for example, in our case, Valetax.
Absolutely.
So I use Valetax. So Valetax comes in. So the benefit of now using a broker like Valetax. So leverage. You've gotten leverage. One up to 2,000. Why would I give 20% of my profits to someone else? And yet I have all this leverage that I can use to, maximize on my margin to trade.
So I think that's now turning the shift now to the brokers, FX brokers. You find that for Valetax, it provides you with actually what we call premium liquidity. It's an ebook broker. We are getting you live feed from the big banks,
from the direct market.
And you've mentioned a very important aspect of leverage, whereby a client is able to choose the kind of leverage they are comfortable with. And then you know how trading works. As long as you are consistent, you are following up a certain guaranteed trading system, and the risk aspect. If you're able to control the risk aspect with this sort of leverage, you're going to win every day, as opposed to going to a prop firm. So I think it's the broker business model is usually very friendly, and then you have all the cards to succeed.
So you have the independence, you have the freedom of time. There are no limitations.
Absolutely.
It's really up to you the way you're going to trade. So I think having that freedom of the clock is very, very important. So Sam, thank you very much.
Thank you.
Thank you very much for shining the light on prop firms. Really, really appreciate it.
Absolutely.
And guys, as you have heard, Sam has basically highlighted the pros and the cons. Basically, you want to have that freedom to be able to control your own funds, to be able to do things according to your own rules, not these rigid rules that will end up interfering with your psychology as a trader, because you'll be trading with a lot of anxiety, tension. Am I breaking this rule? And sometimes the fear of getting a payout. I'd rather just trade, and then at the end of the trade, get my profits without being told, you have to wait for how many days? Is it 40?
Some even 60.
Some even 60 days without withdrawing my funds. I want to trade, and us Africans,
Yeah.
I want to trade, make my profits and get my money now. I don't want a
Absolutely.
lot of stories.
Yeah.
So these are the benefits, these are the advantages. So today when you open up your trading account, when you open up that account for whatever it is that you are trading, whether you want to trade prop, ask yourself, really, are you going to be able to continue operating under rigid, strict rules? And if you are a swing trader and you have made a profit, and then something happens, like a lot of people are asking for a payout, is there a guarantee that you're going to get your money or your profits? So thank you guys. Thank you very much for listening to this podcast. Please, we'll take any questions that you have on the comment section. And until we see you in the next episode, have a very great time trading, and be safe. Watch your risk out there.